Guess what? The sun's out. The snow's almost all melted. It's 18 degrees outside today, February 2nd. Anyways, Calgary Real Estate Board reported 1,234 sales in January. That's a 15% drop from what we typically see, but effectively in line with what we normally see every January. Now, while sales declined across all property types, the steepest declines occurred in higher density homes. Those are basically the attached homes, townhouses, and especially condominium apartment style homes. Now, this is not a time to panic. Let's understand that basically we experienced a typical December slowdown, which we see every year, which subsequently carried through to January. However, buyers who were looking for higher density homes were hesitant to return to the marketplace as their supply choice increased extensively and basically reduced their sense of urgency. Now, that's not the case across all sectors of the city. You'll notice in the Northeast segment, they have a plethora of new availability, as well as the newer communities surrounding the periphery of the city, down to the deep Southeast and deep, or I guess far north, okay? Now, you might think that, well, why is this happening? Well, typically in January, we see a lot of sellers bringing their home onto the marketplace, which causes the sales to listing ratio to drop. And we'll see that this year, it dropped to 44%, which is primarily due to the shifts we saw in apartment and row homes. However, this is not entirely uncommon again for January, as both buyers and sellers weigh their options ahead of the spring market. Now, that's all according to Anne-Marie Lurie, the chief economist of the Real Estate Board, and basically, she knows what she's talking about, and I agree wholeheartedly with everything she said there. Now, the thing to realize or look at is that the rise in new listings compared to the sales caused our inventory levels to increase to almost 4,400 units, which is the highest level in January since 2020. That's when the start of the pandemic was. However, as with sales, conditions vary by property type, with row and apartment homes facing much higher inventory levels compared to long-term trends. This results has months of supply that ranges from under 3 months in the detached sector, which reflects the balanced market, to about 5 months in the apartment-style homes. Now, what the heck does that mean? Basically, a balanced marketplace is when we have roughly 3 to 3.5, maybe 4 months worth of inventory. Once we reach over 4 months of inventory, that means it is a buyer's marketplace. So in the detached sector, we're teetering on the edge of a balanced marketplace, whereas on the apartment style, we're definitely at the start and mid levels of having a buyer's marketplace. Now, benchmark prices for all residential homes declined by nearly 5%. As steep declines were reported due to the oversupply in row and apartment-style homes. So that weighed on overall the residential prices that we had last year. Now, we're going to talk about detached homes. There are 657 sales and 1,243 new listings in January, which is comparable to the kind of numbers and levels reported last year. Overall, the entire detached market, we now have less than 3 months supply, so again, still more or less a buyer's market, however, not in all sectors of the city. Our sales to listing ratio is 53%, so basically what this all means is that you have to be aware of what you're looking for and what price ranges. So if you're looking in the higher price ranges, let's say probably around $1.2 million, $1.4 million and higher, there's still a fair amount of inventory and buyers are looking, but it's not as active. However, if you're going to detached marketplace in any of the 4 quadrants and surrounding communities, you'll find that the demand for houses in that $500,000, $600,000, $700,000, $800,000 range is still wild, and it's not uncommon to have multiple offers on properties. Now, in January, the unadjusted benchmark price was $724,000, which is slightly lower than what we saw in December, but it's also 3% lower than we saw last January. Not a huge, it's a huge percentage in a way, 3%, but in fact, it's not that much when you calculate it on a dollar basis. Now, that also, you have to consider the prices were trending downwards for the second half of 2025, so overall, we're not that different from where we were roughly 6 months ago from a price standpoint. Now, price movements varied across the whole city, with year-to-year declines ranging from less than 1% in the West District to over 6% lower in the Northeast. Now, let's look at the semi-detached marketplace. What the semi-detached marketplace is basically side-by-sides, okay? Or other people call them attached homes, etc. There were 118 sales in January and 251 new listings, which is 10% of the market activity in the city. Now, while both sales and listings improved over December, the growth in new listings was higher, causing sales to listing ratio to ease to 47%. Now, inventory levels improved, but conditions remained relatively balanced, with 3.5 months of supply. So that means it's a balanced marketplace, right? Now, if we look at all that, January, the benchmark price was $667,000, which is similar to last month and only 1% lower than we saw last year. Yet, year-over-year prices in both the Northwest and West districts remain higher than we saw last year, but were lower in every other district, subsequently why we saw the variance across the whole city. Row housing, which is basically townhomes, there were 186 homes in January that were sold, and that's down nearly 25% from what we saw last year. Now, meanwhile, supply continued to rise in both terms of new listings as well as inventory growth, primarily because of new construction that's being built by developers across the entire city. Now, the unadjusted benchmark price remained similar to December levels, but was 5% lower than what we saw last January. Year-over-year price adjustments have been the highest in the Northeast and East districts, followed by the North and Southeast districts, which have faced significant competition, as I mentioned, just from the new home construction. Apartment condominiums. Apartment-style units continue to struggle with supply. New listings reached 787 units, which is not as high as last year, but a significant jump over what we had in December, and much higher than the 273 sales that we saw in January, pushing the sales to listing ratio down to 35%. This drove further gains in inventory, which reached 1,435 units, the highest levels ever reported for January. So, with over 5 months of supply in January, it's not surprising the prices tended down even further. The unadjusted sale price, benchmark price actually, not just the sale price, was $301,200, which is nearly 1% lower than the previous month and 8% lower than last January. Now let's go back a second. That's year over year. If we look at the benchmark price last, I'd say probably April, May, June, somewhere in there, it was $333,000. So it's down significantly from where we were, but you see the reason why? Much more inventory, a lot more choice for people. Now, prices have been falling across every district with year-over-year declines ranging from 13% in the Northeast to 6% in the city center. So guys, if you're looking for deals, if you're looking to buy something for one of your relatives, your kids, an investment property, etc., this is where you should be looking right now, at apartment-style condos. Now, you might say, well, wait a second. Why would I buy now? Prices are down, and they might even go lower. That's what you just said, John. Yes, however, look at it this way. You buy low, you sell high. If you wait until the marketplace changes, which it will probably in the next, I'd say, 15 to maximum 24 months, you're going to say, oh, why did I do this at the start of 2026? John told me to. Listen carefully. Now is the time to buy an apartment-style condo. Okay? Mark my words. End of story. Now, regional markets. We're going to be looking at certain elements here. First, quick response to Airdrie, just north of us. Sales activity remained relatively strong with 106 sales and 227 new listings. The sales to listing ratio dropped to 47%, which is slightly lower than we typically see in January. And basically, we have a roughly 3 months of inventory. Benchmark price in Airdrie for January was $513,900, which is a modest gain over what we saw last year. Now, overall, prices remain roughly 5% lower than we saw last year. In Cochrane, a little bit different story. New listings rose to 149 units, the highest level ever reported in any January. However, guess what? Only 54 sales. Wow. The sales to new listing ratio dropped to 36%, causing inventories to rise and keep months of supply at 5 months, well into a buyer market scenario. Now, after several months of slightly higher months of supply, prices have trended down on a month-to-month basis for 3 consecutive months. As of January, the unadjusted benchmark price was $550,800, which is nearly 2% lower than December and also what we saw at the start of last year. Interestingly enough, I did an analysis earlier today for a property in Cochrane, and I couldn't believe there were 263 detached 2-story homes. and there are only 13 bungalows available. What's shocked me, this is in all of Cochrane. Anyways, on to Okotoks. Okotoks continues to struggle with lower inventory levels compared to long-term trends, limiting sales activity. January reported only 33 sales and 52 new listings, resulting in a sales to listing ratio of 63% and keeping inventory levels low at 79 units. The months of supply just remain just above 2 months. Again, what does that mean? Strong seller's market. Remember I said 3.5 or so months of inventory is balanced, 3.5 to 4. Under 3.5, seller's market. What does Airdrie have? Sorry, not Airdrie, this is Okotoks. Okotoks has 2 months of inventory, so a very strong seller's market. Okay. Now, the total residential benchmark price in Okotoks is $599,500, which is 2% lower than what we reported last year. Now, what does all that mean? Bottom line, now is the time to buy an apartment-style condo. It's a great time for you to move up. If you look at the forecast from Anne-Marie Lurie, which she mentioned, bottom line, prices are going to stay relatively stable this year across detached, increasing probably 1 to 3%. Attached homes are going to vary, similar values type of thing, but when you get into row and especially apartment-style condos, they're going to stay flat to drop depending on where you are. The Northeast is going to be hit the highest because the amount of new inventory coming on there with all the new construction or pre-construction that was sold several years ago coming online will create a lot of availability and lower demand. So what does that mean? You buy when nobody else wants to buy. You sell when everybody else wants to buy. With that, right now is the time to be purchasing apartment-style condos, and a great time if you have a detached home or want to increase the size of your home or have a better location. Great time to sell and upgrade as well. Anyways, that's John's hazy crystal ball, which is always hazy. That's why I talk like this. Anyway, for January 2026, see you next month.